Hello, everybody. This is Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty. To discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So lots of great stuff to go over this week, as always, starting out with the stats, as I usually do. And last week, there were 608 homes that were sold. That was down from 989 the week before, which is totally explainable because it was the end of the week, the previous week. And so that's kind of what we're looking at. I know we're at the 16th or 17th, I guess we are. And basically, so we're always a week behind in regards to the stats. But the median price of single-family homes was at $410, and it went to $404. So nothing to be alarmed about, just really similar in regards to what's going on. The average price, though, went from $503 to $512. So when you're looking at them, that's kind of, what the scoop is. I personally like the median price because I think that it gives us a lot clearer picture in regards to what's going on, and that's the one that I usually always concentrate on. So looking at how those shake down in the different price points, there were 50 of the 608 that were under 250. There were 67 between 250 and 300, 177 between 300 and 400, 134 between 4 and 5, 152 between 500 and $1 million, and there were 28 over $1 million. So when you're looking at the list to ask price ratio overall, we're at 96.38. When you're looking at the, under 250, it's at 93.63. Then we're at the 96.33, 250 to 300. 97, and 90, up to 500,000. Then we go to 96 and we go to 95.66 over $1 million. So the days on the market, we're sitting right at 85 in regards to what's going on there. When we're looking at the condos and townhomes, there were 210 the week before, 130 this week. The median price was at $299,795, and it went to $279,999, which is not a big deal because it's always kind of going in between like 250 to 300. So we were pretty high last week. The average price was $318,252 the week before and $288,562 this week. So how that kind of goes down in regards to the numbers of those 130, again, 50 of them were under 250, 24 between 250 and 300, 34 between 3 and 4, 19 between 4 and 5, 3 between 500 and $1 million, and none of them over $1 million. Now, actually, when you're looking at the number of condos that are over $1 million that are on the market, there's 18. And so even though there weren't any that sold, there's not that many of them that are on the market. So some weeks we have them on there, some weeks we don't, in regards to what's going on. There's 3 under contract, so there could be 3 in the next couple of weeks that are selling. I don't know how long they've been on the under contract. But under 250, basically when we're looking at the list to sale price ratio, we're at 93.25 overall, which is a little bit lower in the condos. It's at 88.87 under 250. Then we go to 93.72, 94.36, 93.99, 104 from 500 and $1 million, and then obviously we don't know over $1 million. Now the average days to contract is 97. We're looking at quite a bit of inventory when we're looking at the condos and such. So we've got 2739 properties on the market. So 130 sold. So if I just take that times 4 real quick, that's 520. And then I take that 2739 divided by 520, and that comes out to 5.2 months of inventory. So for this week, really not too bad in regards to where we're at in regards to what's going on. The other thing that I usually have been going through is long-term leases and single-family homes. The median price last week was $23.50. Now it's at $22.95. Condos and townhouses, it was at $2,000 last week. It's at $19.50. So we're kind of, sticking to the same here in regards to what's going on, but it's always a good indicator in regards to what's happening. Now, I think that the prices are going down a little bit from what I can see in regards to the leases. And it's just kind of a trend. I mean, there is an excess inventory out there. I've actually got a couple of properties that I'm helping some owners, find some renters for, and they are, not going like hotcakes that in the past they would. Like for the last probably 15 years, if you put a property out there, you'd have people that wanted it right away. Now, I would say that it does come down to a little bit in regards to the asking price and that kind of thing for it. I was looking at one of these properties. It's actually in BVL, and which is Buenaventura Lakes in Kissimmee. And that one actually, it was going for 6 years ago. It was going for $1,100. Now it's going for close to $2,000. So I think that the owner will definitely take like $1,900, and that's something that you need to know when you're out there shopping for leases and that kind of thing too. There are people that will definitely, that will go down in price on that, just like on a house or a condo or anything like that. If you're purchasing it, you can make an offer on it. It's not necessarily the end price. So if you are having trouble, or if it's a little bit more than you'd like to afford, then you can definitely make offers on those particular properties. And that's what I would definitely suggest that people do. It's a little bit, like I said, tougher market for the owners out there. So they're looking for good renters. One of the things that is important when you are renting, most of these properties that are from individual owners is that they do want to do background checks. And then a good rule of thumb is that they're trying to make sure that your gross income is 3 times the rent so that you've got the money to pay for it. But, they're a little bit flexible on that and that kind of thing too. I mean, they want to make sure that you're not in a position where it's going to be too tough for you, because that's only going to be a lose-lose situation for everybody. But basically, when you're looking at our market right now, it's very stable for the most part. There are a boatload of rental properties that have come into the market over the last 5 years, and then the rental prices have gone up significantly. So, if you do want a house to rent, there are options out there, I think, that would be, a good fit for you. Now, when it does come down to it, the hardest thing probably when you're renting is when you do have a pet. That's the toughest thing for landlords to work with, because you say, well, I'm giving a pet deposit of maybe $500 or something like that. But it depends on the pet. But a lot of times, you might be very responsible with your pet, but there are other people that aren't. And so they ruin it for the people that are, because basically, if you have to replace all the carpet, if you have to, completely redo a lot of the things in the house as a result of that pet, that extra $500 or $1,000 isn't going to do anything to scratch a dent into the repairs that are made. And I recently had somebody that ran into that. They were telling me, all of the things that had happened as a result of, animals that were pets in that property. And so as a result of it, they ended up spending, $5,000 or $6,000 minimum in regards to the damage that the pet had done. And so it kind of ruins it for everybody in that, in that stature, because you do have to pay extra for the pet. And now it's almost being common that you have to sometimes pay additional rent for the month, every month for the pet as well. I've seen that as well. So it's kind of the new trend. So basically, when it comes down to it, you want to make sure that you're responsible for your pet. But it does kind of ruin it for everybody else if your pet is not the one that takes care of the property and kind of tears it up. So in order to get in touch with us, if you could call or text you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and I'll see you after the break. Welcome back, everybody. This is Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So basically, I was looking at today kind of what's going on with the mortgage rates, and the mortgage rates fell a little bit this week. So basically, when we're looking at them, it comes down to that the 30-year fixed went to 6.36 and the 15-year fixed went to 5.71. So that's a slight decline. It's gone up the last couple of weeks. It goes up, it goes down, all of those kinds of things. So it's down a little bit this week, which will help people that are out there if that's what you want to do. Basically, another thing that I found that was interesting is there was the affordability index that came out, and they're saying that it's improving slightly in regards to what's going on. And so many of you might wonder, what is the affordability index that they actually do? So basically what they look at is they calculate the mortgage payment, property taxes, homeowners insurance, while applying the guidelines that housing costs should account for no more than 28% of the household income. And so that's kind of, what the scoop is. And so basically when they're looking at it, they go ahead and they look at each area for, how much income is needed to buy that median home price and how much the median income is. And so the difference between the income needed and the median income is called the affordability gap. Now, starting off in looking at Orlando that they've got on here, in my opinion, they're way off in regards to the median home price, because they're saying that it's $385.44. So, when we talked about it, that the median price of the single family home is, over 400. And actually, when we're looking at it right here, let me see again what it was. I closed that window. So the median price for single family homes was $404,000 this week. And last week it was 410. So they're using the 380. When you use 380, that is actually the overall price. So that includes the condos and the townhouses and the houses and everything all together. So in my mind, it's a little bit skewed in regards to what they're saying. It's actually higher than what they're saying here. So for Orlando, they're saying the median home price is $385.44. Which is low in my opinion, but in able to afford a home that costs that amount of money, the income needed in the household is $133,021. And the median income that is for Orlando is $81,044. So you can see that there's a big gap between 133,000 versus 81,000, in regards to what the median income. And so basically that's the affordability gap that exists there. So, if you look at there that, 80, are 81,044, and if you look at the list of all of the homes that where you can afford a home, is actually you could afford a home in Ocala that is 88,757 is what you need. So it's only a few thousand off. And the median price of the homes in Ocala are 235. So that's, so you would have to go down even further than that to own a house at that $81,000 amount, if that's what you're making. And so that's where the affordability and everything comes in. So I did have a family that lived here in the Orlando area, and they decided to move to Ocala because the prices were cheaper. And so they commuted because it was kind of a straight shot on the turnpike. And they said, no, that doesn't bother us. It's not a big deal. We're going to keep our jobs here and all of that. And I'm not 100% sure if they did, but they basically, moved to Ocala for that reason and thought that it would be a better lifestyle for their family and everything in doing that. Now, if you're looking at Ocala's, that their median income is 64,410, and the affordability gap there is only like 24,000 versus it being 50,000 or better here in Orlando. And when you're looking at Tampa, it's 122,000 is what you're going to need to have. Palm Bay is 117,000. Lakeland is 114,000. Deltona is 114,000, which is, obviously an area that's, kind of close to us and that kind of thing too. So what people do is a lot of times they do the commute, but that's something that you really have to look at and see, what the scoop is on that. And I remember it was probably about 8 or 9 years ago where our affordability gap, crossed, because it was always that the income needed was actually lower than the median income of the area. So obviously that was great for housing and all of that kind of good stuff. But now we're 50,000 over, which actually I'm going to figure out what the percentage of that is, that we've got. Let me figure that out right now. 81,044 divided by 133,021. That's going to tell us that it's 60% of what it is. So it's a 40% increase above what our median income is. And so that's unfortunately what the problem is when it comes to affordability. So a lot of people are looking out there and are at that median price house and they go, yeah, that would be great. I'd like to live there. But then they are surprised that they can't afford to live there. And basically when the interest rates go down, if they ever do, which hopefully they will, then if the interest rates go down, then that actually brings that affordability, up, because that's going to mean that the median income isn't going to change, but the income needed to qualify for that house is going to be different. And that's absolutely what happened after 2021, after the pandemic was done and everybody decided to move. Then the prices of the homes went up. And after that, the interest rates went up. They went from like 3 to 6. And so the affordability went out the window. And so the fact that the prices haven't really fallen, that they've kind of stayed, because we do have a pretty good cash influx of of properties and everything here. And if you're a 2-income family and everybody makes 81,000, then obviously you're going to be able to afford the house and everything as well. So, but this is saying that this is the median income, for the home, not for the person. So it's kind of it's very interesting when it comes into there. It just is math in looking at it and seeing, but that is a reason why you may not be able to afford the house that you want today. And so you have to look for other alternatives in regards to what you can do. And even if you get a condo, what they're going to do is that they're going to also include like the condo payment as well. Like this, they do include the HOA payment in that affordability amount. A few years ago, they didn't, but they really needed to because it's a payment that you need to pay. And I agree that it makes sense that that all happens. So in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you after the break. Welcome back, everybody. This is Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I wanted to go over today basically a couple of things. One of them that's going on in our market in Florida is insurance. Now, insurance has really been something that has been an issue for a number of years. And basically the bottom line is that the insurance rates have just continued to climb and climb and climb, and you couldn't find insurance. So they do have the state insurance that's out there that's always been considered a last resort, but became many times the norm rather than something that was just available, worst case scenario. And the crazy thing is that the insurance from the state policy actually became lower than many of the traditional ones out there. And so several years ago, I believe it was 3 years ago, that they put insurance reform. That was a main key thing from the legislature. It was at least 3 years ago that they did this, and I believe it was about 3 years. And one of the things that they did is that they were trying to curb the litigation, the litigation that wasn't necessary, that was kind of abusing the system. And that was one of the main things that actually, was a big thing. Now, what they have found 3 years later is that the litigation has gone down 50% from what it was. So it's still out there, and it still needs to be an option, and it still is when it's necessary. But, it's not like everybody. I mean, there were a lot of people that I was talking to that they would tell me, yeah, somebody knocked on the door and they said, hey, we can, say a roof was damaged in the hurricane. And so they would come in there and they would say, hey, we can remodel your kitchen. We can remodel all this stuff based on your roof needing to be repaired, from a hurricane. Is kind of what it was. I mean, that's a little exaggerated, but not much, because there were a lot of those things going on. And they said, and people would tell me, they said, yeah, we've just got to wait another, 6 months. And then our whoever is working with us, they're telling us that, we're getting an extra 100,000 or something. And I was like thinking, well, there is something wrong with that picture. And so basically, there were some safeguards that were put in there. And so as a result of that, the, like I said, 50% litigation, and the average price has gone down 14.4% on homeowners insurance, which I'm sure every homeowner out there is going, yay, that's great, because that also affects your affordability and everything as well if your insurance is definitely higher. And the biggest thing that I can say when it comes to insurance, what you need to do out there is you need to shop it. And I would say that, you need to shop it almost every year, and basically, just check and see if there's anything else out there that's better. The other thing that I strongly recommend that everybody does is that they do 4-point and wind mitigation for sure. Wind mitigation every 4 years, because that's how long they last. So what happens with that is that, an inspector that's licensed goes and checks the roof, checks the attic, and all of that kind of stuff to make sure that the roof is still good, that there are straps that are strapping it down. And then you can get, usually it's $400 or $500 or so minimum per year reduction in your homeowner's insurance. And so, I get that every 3 or 4 years whenever they tell me, hey, your wind mitigation mitigation has expired or is expiring, then I go ahead and get another one. It costs about $150 to get it. So the first year you're going to save $400, and so you're going to save $1,600, over the life of that wind mitigation report, and it costs you $150. It's a great spend, right? And so I always recommend that people do that. If you need somebody to, to do that for you, just give me a call and I can give you a couple of people that do that all the time. And they might do it when they're doing another inspection in their areas, in your area, so they don't have to, necessarily, just come for you if they've got some other inspections, going on and that kind of thing. The 4-point inspection that I mentioned, a lot of times if you're changing insurance, you need to have that. And that goes through the roof, the AC, the electrical, and the plumbing to make sure that everything's all on the up and up on that, because they want to make sure that they're not going to have any losses right away when that happens. So that would be the other thing that they're looking for when it comes down to it. But, basically we knew in our industry anyway, in real estate, that there needed to be some reforms in insurance because there were a lot of claims. I remember reading several years ago that of all of the roofs that were being replaced in the U.S. by insurance companies, it was about 90%, if not a little bit higher, that were in Florida. And there's just something wrong with that picture, right? So it's like, so everybody, even if you weren't asking for a roof to be redone, other people in your area were, and that was raising your insurance. And so basically, when it comes down to it, yes, there is damage and that kind of thing that's done with hurricanes. But then there are also roofs that, might be 25, 30 years old that you might have to replace yourself. Not necessarily because of a storm. It's just aging out. And, so there were a lot of people that were being guided to take advantage of that. And so that has kind of, changed around a little bit and all of that kind of good stuff in regards to what's going on. Another good thing that I wanted to talk about here is young buyers are relying on down payment help to buy homes. I talked about the affordability in the last segment before this one, and basically one of the ways that younger people, if you are, you need to buy down basically the amount of what your mortgage is so that you can afford that house. A lot of times you're getting help from family, gifts and assistance programs to buy homes, highlighting how affordability pressures are reshaping the path to home ownership. So when it comes down to it, nearly half of buyers who received help said the money came as a gift, not as a loan. And obviously that's a big bonus if you're going to get that. 23% of the homeowners said they put down 20% or more when buying. So when you're buying, there are programs, conventional loans. As a first-time buyer, you can get 3% down. And if you're not a first-time buyer, you can get 5% down. If you're doing FHA, you can get it at 3.5% down. And so then it comes down to that affordability. How much can you afford based on your income and everything that we talked about before? But one surprising thing to me is only 6% of the people who got assistance used formal down payment assistance programs. So basically, there are multiple down payment assistance programs that are out there that are available. And, we've got several lenders that we work with that use these programs and figure out ways that they can, that you qualify for and all of that kind of stuff. And basically, a lot of times it's a grant, which means that if you stay in that house for 5 years, it's a loan that goes on the house, and you may not have any payments on it until your original loan is paid off, which is a 30-year loan. And then after that, then that becomes that you would pay it, or if you would sell the house, you would have to pay it back. But many times after 5 years, you no longer owe that money. So that's how those down payment assistance programs work. A lot of times you have to do a class so that they teach you about home ownership and the financing of it and all of those kinds of things, which is not a bad thing to go through and everything. And then you get, in essence, kind of free money. You've got to jump through some hoops in order to get it and everything. And, it's either interest free or it ends up being forgiven after 5 years in many cases. So basically, it's something that if you are looking to buy a home and you're looking at your options, this might be a good thing for you to consider, to look at and see what it's going to do for you. And some of the buyers that we're studying on here said financial assistance helped them lower their monthly mortgage payments, obviously. And, so that's something that you need to look at. So basically, again, they were saying that 40% of the homeowners receive down payment help from on their current home, and that's up from 35% in 2023. So basically, 80% of the Gen Z homeowners said they received down payment assistance, compared to 56% of millennials, 35% of Gen X's, and just 12% of baby boomers. But basically, if you need the help, you want to know that it's probably out there and we can help you game plan in how to make that all happen. So in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you after the break. Welcome back, everybody. This is Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I was looking at this article today that I thought was really interesting, and it was talking about buying versus renting and what that's going to do to your pocketbook and your wealth and all of that kind of good stuff. And basically, this was actually a study by the 10-year rent versus buy wealth study that was done by AD Mortgages 2026. They did it. That was what they called it. AD or Ad Mortgages 2026 10-year rent versus buy wealth study. And it compared projected 10-year outcomes for homeowners and renters in 250 U.S. cities. The study measured home ownership equity against renter investment returns, assuming renters invested the down payment and monthly savings in the S&P 500. So basically, instead of putting your money into your house, you put the money into the market to see what happened. And Miami had the biggest gap. That in Miami, if you put it into real estate or into your home, you basically had a $509,000 increase, that you had more wealth with having your home in Miami than you did if you would have put that same money into the stock market. In Orlando, it's $317,027. If you were to purchase a property, you would use your down payment and everything like that, that instead of investing it, you would put it into your house. And then the amounts that your payment doesn't change because of the rental market and all of that kind of good stuff, you would be $317,000 ahead versus if you would have taken that down payment money and put it into the stock market. And so again, that's a 10-year rent versus buy wealth study that they look at. So usually, when you're putting it into all of these calculators, which I do all the time for people, it's like we're assuming that the properties are going to go up, like 3% a year. We're anticipating what's going to happen with the rents, and we don't know. And so this is actually a look at historical data that shows that in Orlando, if you were to purchase a house versus spending that money putting that money into the stock market, you're $317,000 ahead by putting it into a house versus putting it into the stock market. And unfortunately, what happens for a lot of renters is that they're not even investing that money. So the gap is much bigger if you didn't even invest that money at all. So that's, really something that I think that people need to look at and understand and all of that kind of good stuff in regards to what's going on. So it basically is really something that I think is really important to know when you're looking at it. And, the thing personally that I like about buying versus renting is that you're in control in regards to what you can do. You're not limited by a landlord saying, no, you can't, paint, you can't plant, you can't do anything that you want to really to make the house too much your own. You're limited 100% to their whims and what they want you to do or allow you to do. And so basically when it comes down to it, for me, I think that I would personally prefer to have a property that I can do what I want to in it, and I don't have to worry about the rates are going to go up or anything like that. It's all pretty stable because you build everything in that way in order to make sure that it all is going to work out the way that you had expected it to. Now, one more thing that's going on in real estate that I think is important for people to know, and that is condo financing rules are going to be changing in 2026 and 2027. Actually, this is going to be starting in August. And basically, what happens now with condo financing is that, when you're going into a condo, they're loosely looking at the condo itself, the development in regards to looking at what the board's doing, what the reserves are, all of those kinds of things. They're not really looking at it too deeply for the most part. And, if it's an established thing and everything like that, they're not required to look at it. But what's going to happen starting loan applications dated on or after August 3rd is basically you're going to have to go through a full review unless they qualify for a waiver, which I don't know exactly what that is. They have been doing what they call a limited review process by Fannie Mae, and Freddie Mac was doing a streamlined review process, and both of those are going away, and they're going to do a full review. So what this is going to do is it's requiring lenders to take a closer look at the condo project itself, not just the buyer. It can include the association's budget, their reserves, insurance, project eligibility, financial condition, and whether the property meets the agency standards. And, so if it's got 10 or fewer units, there might be a waiver that Fannie Mae is going to be doing on it, but for the most part, it's going to have a full review in that. So the reserve change may be especially important in Florida for applicable condo loans. Replacement reserve funding expectations are going to increase from 10 to 15% of annual budgeted income beginning in January of 2027. And that means condo budgets, reserve studies, insurance coverage, and project eligibility could draw more scrutiny during financing. So it's another hoop to go through in a condo. And so not that it's necessarily bad, but our condo market already has gone through a lot of changes because of the amount of engineering studies and everything that they've all gone through ever since the Surfside accident, where the condo building fell and over 100 people died. And so as a result of that, these engineering studies have put in a big burden on the condo fees and increased them quite significantly. And so now they're kind of through that wave. And now this is the next wave that the people that are giving loans on condos are going to be requiring. And so it just is, a little bit tougher to get into a condo is what it's going to be with these additional requirements that are being done by the lender. So it's not just you that has to qualify, it's the condo that has to qualify. So if you are in a condo and you're considering selling, now might be the time that you might want to at least look at what's going on with your condo budget and everything like that. Look and see if they've got those 15% reserves and if they're in good financial condition. And that will definitely help you with selling it in the future and, it and make it a little bit tougher if it's not in as good a shape as you would have hoped. And so that's just something to look at and to know and everything as you're buying a condo today in what you want to look at and all of that kind of good stuff as well. And one thing to know is that if you're looking to see if it's a condo or a townhouse, the big difference is going to be in the legal description. That's going to be the easiest way to tell. If it's a lot number, it's a true townhouse. If it's got a unit number, then it's a condo, because many townhouses in Central Florida are actually condos. So you just need to know that and look at it as you're going along. But in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we will see you next week. Have a great one, everybody. Bye-bye.